Folks, we've got big earnings this week. GameStop and Adobe, they're both reporting earnings. Our readers follow both stocks. I mean, especially GameStop, right? Going up, down, $200, $300, back down to $198. It's been all over the place. But GameStop is slated to report on Tuesday its first quarterly earnings report since a Reddit community successfully encouraged hordes of people to buy shares of it and other heavily shorted public companies, sparking a congressional hearing and tons of buzz on Wall Street about GameStop. Now, some GameStop shareholders have said they believe the retailer can live up to its lofty new stock price with help from Ryan Cohen, the Chewy's co-founder, recently added to the company's board. GameStop's share price of about $200 as of Friday is more than 10 times as much as it was the start of the year, though it did peak at $483 in January. Now, Wedbush securities analyst Michael Pachter said it isn't possible for GameStop's results to reflect its roughly $14 billion valuation given the issues it is facing. He says there is not an institutional investor alive who's considering going long at $200, end of quote. I agree with him between us. Mr. Pachter said this is not a .com that's starting up. Analysts expect the retailer to post its strongest quarterly revenue and profits in 2 years, bolstered by winter holiday shopping season that included the release of next-generation game console from Microsoft and Sony. But some also say the company's performance should reflect changes created by the pandemic and long-term industry changes that it has failed to insulate itself against. For the period ending in January, let me be clear, GameStop is projected to post a profit of $88 million or $1.35 cents per share on more than $2.2 billion in revenue, according to FactSet poll of analysts, which is fairly accurate. Now, technically, GameStop, as you could see here, went in and hit a peak of about $182, $183, as I mentioned earlier. But since then, it's been kind of backing away, and most recently, back in March 10th, it hit a high of $342. But I'm going to be very, very honest with you. The price, the price of the stock just does not reflect, in my opinion, anywhere near the levels we're seeing. Now, when I'm looking at it, the stock on a weekly chart, let me just kind of back away here. You could see that it hit a top, it hit another top. It looks like it's going to hit another top, but the trend is now going lower. And I'm expecting honestly over the next couple of weeks to a month, the stock to hit its 50-day moving average and go lower. So while earnings may give it a little boost, maybe a short-term boost in price, I'm not seeing anything realistically cause this stock to go higher. The bottom line is most people download their video games from online. Nobody goes to GameStop. Moreover, it's going to take a little while for malls to start really getting their groove back with all this COVID vaccinations and all of this world reopening business. And GameStop has not been a very profitable business for many, many years now. So that whole model of going to GameStop to buy video games is just not there, and I'm not seeing it. And it doesn't matter what Reddit did earlier in the year. The bottom line is, I don't think it's going to happen again, especially with all these investigations, all these hearings, SEC, witch hunts. So I think the stock is going to go from 196 to the 110 level, maybe 120 level, and then kind of hover around that level and eventually go lower. But I'm not seeing big upside for GameStop, and I just don't see how it's humanly possible for the stock to rally much more, at least based on the fundamental long-term levels. Now, let's talk about Adobe, the other stock set to report. And I've got Adobe right here on my radar, and that's the 50-day moving average we're looking at. Now, Adobe set to report its fiscal first quarter 2021 results on March 23rd, which is tomorrow. Now, in the last reported quarter, the software giant delivered an earnings surprise to the upside of 6.04%. For the fiscal first quarter, the Zacks consensus estimates for earnings has remained stable at about $2.79 per share over the past 30 days. This indicates a growth of 22% plus from a year ago reported figures. The consensus mark for revenue is pegged at $3.77 billion, implying growth of again about 22% from a year ago. Now, focus on digital media business is the key right now. The company witnessed strong demand for Adobe's digital media solutions in the fiscal fourth quarter. The trend is expected to continue in the to-be-reported quarter, driven by impressive growth in the Creative Cloud and Documented Cloud businesses. Net new subscriptions adopted of enterprise services and focus on high-potential segments like education are likely to have driven Creative annualized recurring revenue in the fiscal first quarter. In addition, it witnessed increased demand for professional video products given strong engagement for Adobe Premiere Pro and After Effects. This is expected to have driven its Creative revenues. Management's expectations for first quarter fiscal 2021, Adobe expects year-over-year revenue growth of 26%. So we've seen 21, 22, and 26% from digital media. Digital experience segments revenue are expected to grow about 19% year-over-year basis, while digital experience revenue subscriptions are likely to increase 22%, all within line with the expectations. Management expects earnings to be at $3.75 billion and 2.78 cents per share respectively. Now, looking at the stock on a technical basis, we see that Adobe's up 2.15% right now, but what's really causing me to pause is the fact that it's been trading sideways now since September 2nd, which is when all the large cap FANG and large cap tech stocks made their all-time high, and it's been really congesting since that time. So I would really like to see it break above the 50-day moving average, because right now it's trading below the 50-day moving average, which is not promising. So what do I expect tomorrow? I'm expecting the stock to rally. I'm expecting it to rally, but I don't know if it's going to rally to all-time highs. I think it's going to rally somewhere between the 500 and 520 level, because the numbers are really good and Adobe's one of the top large cap tech companies. The problem, again, it's a large cap tech, and large cap tech is out of favor, and as we all know, sentiment is what drives price. So we may see some hesitation in institutional sponsorship coming into Adobe, but I believe we will see a price of near $500 after this earnings. It's usually, the stock usually has positive earnings surprises that cause a good momentum jump, and for it to go from 450 to 500 is not a big surprise. I hope that helps. Folks, there's a formula that's helped Wall Street legend Chuck Hughes lock in a 96.3% win rate. The best part? It doesn't matter if the stock market goes up, down, or trends sideways. Now, his latest discovery could allow the average trader to profit on stocks, even when he's completely wrong about market's direction. Imagine profiting when you're wrong about market direction. Man, I love it. Now Chuck is finally revealing to the world what he's found and how you can start using it, the strategy to pull potential profits today. All you've got to do is click on the link below to learn how you can get your hands on Chuck's most recent trading discovery. Make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post our next video.